Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. What I'd like to talk about this morning is the equity markets, and more specifically the character change that appears to be developing in the equity markets. So as you know, the equity markets hit a low on Christmas Eve day. They bounced from there, pretty much got some follow-through trading on there and continued to rally. Now they ran into natural resistance on the S&P right at about 2,600, on the NASDAQ right below 7,000, and the Dow right below 24,000. This is pretty much expected. Those were support levels previously where the market held up, and now it's running into that. So we're going to probably see some sideways action, or the markets may reverse. Now here's where we get into the character change. Specifically, every time we got a follow-through buy signal in early and late November, the markets rallied for a few days and then quickly failed, and they quickly just dove right through the 20-day moving averages. Now what we're seeing is the markets rallied, and it just kind of slowed down. We haven't had these reversal sell-offs to the downside. And specifically, if all these indexes continue to stay above their 20-day moving averages, that's a character change I'm talking about, where the market finally starts to just methodically march forward or move a little sideways without these huge basic sell-offs, and that's what I'm looking for. Now also what we're starting to see is in the big widely held stocks like Amazon or Netflix, stocks that a lot of shorts want to jump into when they come into moving averages like the 200-day or 50-day, but we've seen these stocks move higher. Basically, they didn't reverse lower, and they're actually holding support and continue to march higher, so that's another really good sign. Also, what we're seeing is a lot of growth stocks that are holding their high volume closes or holding their gap up, so we even have stocks that are breaking out, specifically in enterprise software, the software database group, and in a fiber optic stock. So all those are very important things to look at. You put those three together, looking at the index, the character change in the indexes, how the widely held stocks are acting, and how the more speculative growth stocks are acting. And also, we got a pretty good clue. The market's tipping its hand this morning. As Citigroup reported, it beat on earnings, however, it missed on revenues. It looked like it was going to drag all the other banks down early with it. It was down about 1% as the market opened, but now Citigroup's trading about 2 to 3% higher, and all the banks are trading higher. Now, this is after a revenue miss. So this tells you that the worst was probably priced into the market, and anything that's pretty good, the market may rally on. So you just need to keep an open mind. So as always, like I say, let price and volume be your guide. Watch the moving averages, watch the 20-day. If the indexes stay above that, watch how leading stocks are acting, and see how reacts to the earnings that we have coming out this week. So we got Netflix reporting on Thursday, Altasian, symbol TEAM, also reporting on Thursday. That may be like a little bit of a bellwether for the software group, so just take a look at that. But again, keep an open mind. Anything can happen here. We might retest the lows, I don't know, but just let price and volume be your guide, and you got to keep an open mind. This is George Tkaczuk, where RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.